Banking, as most people understand it, is dead. In this video, I'm going to explain why the old banking model is dead. And more importantly, I'm giving you the new rules of money. These are the rules the wealthy use to stay liquid, stay private, and stay safe in a world where your bank is no longer your friend. Because in the old world, a bank account was a right. In the new world, it's conditional access. If you just walk into a bank as a guy with crypto, you're going to get rejected. You'll get flagged, you'll get delayed, you'll get closed. But if you walk in with structure, if you walk in as the director of an international consulting entity, are a foundation engaged in global trade, are a business with clear documentation and compliant flows, now the same bank treats you differently because the system runs on narratives and paperwork, not truth, not fairness, structure. So let me give you a simple mental model. A modern money setup looks like this. You have a local bank for local bills and daily life, a backup bank in another jurisdiction, a liquidity reserve that you control directly, and a storage strategy where real wealth sits long-term. And you move your money like this. Income comes in, it flows through pipes, and it exits into storage. And liquidity stays accessible in multiple places. You're not trapped. You're not fragile. You don't have a single point of failure. That's the whole. Banking is dead. These are the new rules for your money. For the last 100 years, the word bank meant safety. You pictured grand buildings, marble pillars, men in suits, quiet hallways. And the story was simple. You put your money there, they kept it safe. They pay you a little interest. You're a responsible adult. That was the old world, and that world is gone. Banking, as most people understand it, is dead. And it didn't die because the buildings fell down. It died because the social contract was broken. Because today, your bank is not a vault. It's not your money sitting safely behind a locked door. Today, your bank is something else. Today, your bank is a permission system, a compliance system, a surveillance checkpoint for the government. And I know that sounds dramatic, but if you've ever had a payment delayed, a transfer questioned, an account reviewed, or a card randomly declined, you already know what I'm talking about. Here's the uncomfortable truth. Your money in the bank is not your property. It's an unsecured loan you are giving away to a highly leveraged institution that can change the rules whenever it wants. And the most dangerous part, access to your own money is now a privilege that can be revoked instantly by an algorithm or a bureaucrat or a policy change. So if you're still operating with the old rules, like keeping 100% of your net worth in one bank, in one country, in one currency, you're walking through a minefield, blindfolded. In this video, I'm going to explain why the old banking model is dead. And more importantly, I'm giving you the new rules of money. These are the rules the wealthy use to stay liquid, stay private, and stay safe in a world where your bank is no longer your friend. Let's get into it. So how did we get here? How did banks go from safe and boring to fragile and controlling? Two reasons, two nails in the coffin. Number one, privacy died. It used to be that what you did with your money was your business. Not anymore. Today, banks operate inside a global reporting machine. FACTA, CRS, KYC, AML. And listen, I'm not saying crime prevention is bad, but what happened is this. The bank manager is no longer your partner. He's not there to help you build wealth. He's an unpaid compliance officer, an unpaid spy for the tax authorities. Every transfer, every deposit, every withdrawal is scanned, flagged, scored. If you move too much money, you're treated like a criminal until you prove you're innocent. And this creates a new reality. You don't just need money anymore. You need a story. You need documentation, context. You need justification. You need permission. And that brings us to nail number 2, politicalization. This is where it really gets dangerous, because today it's not just about whether you broke the law, it's whether you're considered a reputational risk. And that phrase, reputational risk, is one of the most terrifying concepts in modern finance because it's vague, it's subjective, it's unchallengeable. We've seen people get debanked for controversial opinions. We've seen accounts closed for being in the wrong industry. Crypto, supplements, online marketing, international consulting, even perfectly legal businesses. We've seen transactions frozen because the receiving country was flagged, or because the amount looked unusual, or because you triggered a compliance rule that nobody will explain to you. And here's what you need to understand. When a bank can freeze your life without a court order, you don't have freedom. You have a permission slip. And that permission slip can be revoked. So the question is, if the bank is no longer private and it's no longer neutral, why do people still treat it like a vault? Because they don't realize the third piece, the financial rot. Let's talk about the math, because even if surveillance didn't exist, even if debanking didn't exist, the modern bank still fails one basic test. It doesn't protect your purchasing power. Traditional savings accounts pay what? Maybe 0.01%, maybe 1%, maybe 4% if you're really lucky. But real inflation, depending on where you live, it's not the 2% they tell you it is. It's 10%, 15%, sometimes 20+% in the real world. Once you count food, insurance, and energy. So what does that mean? It means if you keep your wealth in a standard fiat bank account, you are losing money every single day. Your money is literally melting, and people accept it because they think, well, at least it's safe. But is it? Ask the people who experienced bank runs, withdrawal limits, account reviews, or the sudden collapse of a seemingly safe institution. Banks are leveraged, they're fragile, and most people don't understand how fragile until it's too late. Because banks don't keep your money sitting there anymore. They operate on fractional reserve banking, meaning you deposit $100 and the bank doesn't keep $100. They keep a fraction and they lend the rest. So what happens when too many people withdraw? The system breaks. And when banks break, they don't always get bailed out. Sometimes they get bailed in. That's the part nobody wants to talk about. A bail-in is when depositors pay the price because your deposit is actually a liability to the bank. So the old rules were save money, put it in the bank, earn interest, retire. That model is dead. So what replaces it? What are the new rules? I'm going to give you 3 rules. You don't need all 3 to start today, but you need to understand all 3 to survive long term. First, rule number 1, jurisdictional diversification. Never have your citizenship, your business, and your savings in the same country. Let me say that again. Never have your life stacked in one place. Because if you live in one country, bank in that same country, work in that same country, then one event can freeze your entire existence. One lawsuit, one tax dispute, one banking error, one divorce court order, one policy change, and suddenly you have zero access to your own money. You can't pay rent, you can't pay suppliers, you can't travel, you can't operate. So what do? You build a backup system. You need a backup bank. You need a backup jurisdiction. You need a second option that doesn't care about your domestic politics. It doesn't care about your local chaos or your local banking system. This is why people set up accounts offshore, not because they're doing something illegal, because they're doing something smart, because diversification is no longer just an investment strategy. It's a survival strategy. If your local bank freezes you, you don't panic, you don't beg, you don't hope customer service helps. You pull out a different card and you keep living your life. That's the whole point. You don't argue with the system, you outgrow it. Now, rule number 2, you need to learn how to operate outside the banking system. And this is where people get really emotional because the word crypto triggers them. So let's be clear. I'm not talking about meme coins. I'm not talking about gambling. I'm talking about something practical. Stable coins, digital dollars, USDT, USDC. Here's why they matter. I can send $100,000 to someone in Japan in 30 seconds on a Sunday night for a couple dollars in fees. Try doing that with your local bank. It's 5 days, it's paperwork, it's delays, it's compliance questions. It's ridiculous. Banks still move like it's 1978. Stable coins move like it's the internet. And now the key point. If you hold stable coins in a cold wallet that you control, that's money no bank manager can freeze. No one can review your account. No one can close your relationship. No one can lock you out because they don't like your industry or your opinion or your transactions. That is what I call uncancelable liquidity. Now, do you put 100% of your money there? No, that's not the point. The point is to have a portion of your liquidity in your custody. So even if the system becomes hostile, you can still transact. You can still move. You can still function. Because the modern world isn't about having money. It's about having access. Rule number 3. Now, this is the one most people miss. And it's simple. Treat banks as pipes, not buckets. In the old days, banks were buckets. You left your money there for decades. They are for moving money, not storing money. So what does that mean in real life? It means you use banks and fintech platforms to route your income efficiently. Wise, Revolt, neobanks, business accounts. They're fast, they're convenient, they have great user interfaces and lower fees. But here's the rule. Do not store your life savings inside the pipe, because fintech companies can be aggressive with compliance algorithms. They can lock accounts. They can delay transfers. They can ask for documents endlessly. So your strategy becomes this: earn in strong currencies, use the best tools to move it, but store wealth somewhere else. That could mean real assets, hard assets, are structured jurisdictions where you have legal protection. Because again, the goal is not to fight the bank. The goal is to make the bank irrelevant to your survival. So let me give you a simple mental model. A modern money setup looks like this. You have a local bank for local bills and daily life, a backup bank in another jurisdiction, a liquidity reserve that you control directly, and a storage strategy where real wealth sits long term. And you move your money like this: income comes in, it flows through pipes, and it exits into storage. And liquidity stays accessible in multiple places. You're not trapped. You're not fragile. You don't have a single point of failure. That's the whole game. In conclusion, banking isn't going away. Banking isn't disappearing, but it has changed. It has become hostile. And if you keep using the old rules, you're going to get punished by the new system. Because in the old world, a bank account was a right. In the new world, it's conditional access. And the people who win in this world are the people who structure themselves correctly. Because banks today don't just want to know your name. They want to know who you are, what you do, where did the money come from, why are you moving it, and what your story is. And here's the part most people don't understand. If you just walk into a bank as a guy with crypto, you're going to get rejected. You'll get flagged, you'll get delayed, you'll get closed. But if you walk in with structure, if you walk in as the director of an international consulting entity, are a foundation engaged in global trade, are a business with clear documentation and compliant flows, now the same bank treats you differently because the system runs on narratives and paperwork, not truth, not fairness, structure. That's the difference between being canceled and being untouchable. So if you're watching this and thinking, yeah, I feel like my money is trapped in the old system, or if my bank froze me tomorrow, I'd be done, then you need to modernize your setup. You need a plan. You need a structure. You need a second option. And that's exactly what we help people do. We help clients build the right LLCs, the right foundations, the right residency paths, and the banking setup so your money stays liquid, private, and protected. If you want to help building a cancel-proof banking setup, there's a link below. Book a free 15-minute call. We'll look at your situation and show you the smartest next steps. No pressure, just clarity, because you don't want to wait for the letter in the mail saying your account is closed. Act before you need it. That's the new world. Those are the new rules. And I'll see you in the next video.